Hello, everyone. This is Fred or LZD306 in Dojo. I just wanted to talk to you regarding about SPY and the whole market and why we're heading for a possible correction in the next few weeks. So as you can see, I'm not sure if you guys were able to see the video regarding about Jay Powell. Basically, we're increasing the interest rates and which pretty much gonna mess up the whole market. So we'll talk about here in SPY. So trend break right here. If you see, this is like gonna go up trend over here from October. And then finally it broke today. And then the bearish divergence over here. So this is going up. The momentum is going up, but this is going down. So the more it goes up over here, but has less power of going up here. So now it's like, what do you call this? The bears can easily just bring this down because there's less bulls on this levels. So that's the second one. And then 55 EMA right here is the blue. And we were able to hold it yesterday. And that's why I felt like it was gonna go, where we're gonna bounce up, which we did. And then we pretty much just kind of took all it back and then break the daily level from yesterday. And then the gaps, these are the gaps that we had before. So these are most likely going to get filled. If we're going to go for a market correction, it's most likely it's going to go down like that. Let's see. Usually the market likes to bounce in the 618 Fibonacci level over here. So maybe if we can fill this from the 442 level and hopefully bounce from here. But I have a feeling that we're gonna go all the way down here and fill this up and then possibly bounce from there. And the 2 days of high volume selling, you don't want to mess around when there's actually high volume of selling, and then you can actually see in the price action of the candles over here. So those are the reasons. So now what are we looking? Okay, so most likely we're gonna have a nice bounce here from today's level, or maybe what do you call this, fill this up first and then bounce up. The reason that I wanted to make this video just because I don't want you guys to get caught in the bounce here. So what you're probably gonna see in the next few days or weeks is go up like that and then go down. So basically this is the trajectory. This is what I'm seeing right now. So we're probably gonna go up in a small bull like relief here, or dead cat bounce, and then it's probably gonna test this this trend line over here, and as well as the resistance around this 456 level or 457. So most likely we're gonna get a bounce here like that, or maybe from here in the 454 and then go all the way down. The reason that I just really want you guys to be cautious, just because I don't want you guys to like, oh, the market's gonna be bullish again. We pretty much broke the level, and 2 days of high volume selling. It's not good. So I don't want you guys to get bull trap over here. So I don't want you to get bullish until we break this downtrend, and until we break this, unless we can break that one, then we can probably, start, thinking of being bullish again. But I doubt it. From the interest rate, from Jay Powell, the way the whole news is going, and I mean the price action is pretty much showing it. And then we're also gonna have quad witching in the next few days and weeks over here. So same thing with triple Qs. So we finally broke that level. I also, like I said, I don't want you guys to think that we're gonna have a bull market. It'll be a nice, like a day or two, or maybe the same day that's gonna go up, and then most likely we're just gonna get bounced down. We're just gonna bounce down here. All right. So let me go back real quick from SPY. So from the wave theory here, we go 30-minute over here. So it's like 1, 2, 3, 4, 5. And most likely we're just gonna a shallow pullback and then go down. That's most likely. For over here. So same thing with triple Qs. Until we break this yellow line, this downtrend, I wouldn't be thinking of going long. And then I wouldn't like catch a falling knife as well. We did break the weekly, I believe. Yeah, we did break the weekly, and then the next weekly will be this one. And then this is the next support, and then this right here. So just be careful with the triple Qs. And the triple Qs really respect the what do you call it? We still have the 55 EMA over here, the triple Qs. So that's something to look forward to at least. And it's going to be in the 383 level, or maybe by 384 level. And there's also a support over here. So this might be a good bounce from here. Might go down for a little bit and then bounce then. And then most likely we'll continue going down and then fill this up. And that's going to be a full-blown correction if that's the case. Yeah, that's going to be like a 12% move if that. And the reason that I feel like we're heading there is just, it's because of this, the Dow Jones. So we gapped down over here. We broke the 50 EMA over here, 55 EMA, and then we're now pretty much bearish on this. So the Dow Jones pretty much is leading the bear trend right now. Same thing happens here. We're probably gonna get like the most crazy bull trap here if we're gonna like bounce right here and then fill this gap and then go down like crazy. Then since Dow Jones is the one leading the market right now when it comes to the bearish market, I would keep an eye on this. If this can't hold this level, this trend over here, then we're pretty much going for a stock market correction, which is kind of weird, like I said, because we just had that stock market correction during COVID last year. Right here. So that doesn't really happen often. Usually the market just keeps running for, a few years, and we don't get like a back-to-back correction. But it doesn't look that bad compared to like it doesn't look that bad compared to like the COVID. But we're pretty much gonna like on the weekly, we pretty much gonna be testing. What I'm seeing is like testing the 55 EMA on the weekly, and we'll see from there. That will be like the biggest test for a SPY. But on the daily, these are the levels I'm looking for support. 451, 444, and as long as we don't break the 427 around these levels, 428, then we're still kind of safe. But other than that, I'll be careful because we do have like some gaps that needs to be filled over here, and I don't want you guys to kind of get caught in the middle of that. This is going to be a very volatile market. It could like during the day we could go up and then just like whipsaw back and forth. It's going to be really choppy, but there's going to be a lot of movements. So just follow the index, just follow the price action. We're not going to be bullish until the market tells us not to. So good luck, guys. Be careful out there. We can make money going down. So it's been easier. It's easier to it's also like when you try to chase a breakout going up, sometimes it punishes you because like it will dip right away. However, the market takes the elevator down, and even if you chase, it does not punish you compared to chasing going call versus going put. So going put is a little bit easier, just because if we're gonna go down, we're gonna go down. Like it's just basically gonna go into a one direction. So until we hit the support. So be careful out there, and good luck.